Before you can fill a gap, you need to know what kind of gap you are dealing with. And this matters more than it might sound because different kinds of gaps have different solutions. And applying the wrong solution just wastes time and produces frustration instead of improvement. And most people treat all their gaps the same way. They read more, they watch more content, they hope that more information will eventually translate into better results. For knowledge gaps, that approach works reasonably well, but for other kinds of gaps, it does almost nothing. There are three distinct types of expertise gap, and understanding the difference between them is the foundation of the audit that we're about to do. The first is a knowledge gap. This is the most straightforward type. You do not understand how something works, the concepts are unfamiliar, the mechanics are unclear, the terminology is confusing. For example, if you can't explain how a cash-secured put works, or you're not sure what determines an appropriate risk amount per trade, those are knowledge gaps. They're also the easiest type to address, because the solution is simply structured learning from someone who can explain the concepts clearly. A good mentor, a well-organized course, or even a carefully chosen set of reading material can close a knowledge gap in a matter of weeks. The second type is a framework gap, and this is where many investors get stuck without realizing it. A framework gap means you understand the concepts in theory, but you don't have a systematic process for applying them in practice. You know what a cash-secured put is, for example, but when you sit down in front of a live market with real money, you're not sure which stock to sell a put on, or which strike, or for which expiry. You have a general sense of what you're looking for, but you can't describe your criteria specifically enough that someone else could follow them, or that you yourself could follow them consistently under pressure. The solution to a framework gap is not more conceptual knowledge. It's a tested, specific process from a mentor who's already built and refined one. The third type is an execution gap, and it's the most personally uncomfortable to acknowledge. An execution gap means you have the knowledge and the framework, but you can't execute them consistently when real money is at risk and real emotions are in play. You know what the method says to do, but under pressure, you do something different. You take a trade the method wouldn't sanction, or you exit a position too early because the unrealized loss was making you uncomfortable, or you skip a valid setup because you're still shaken from the last loss. More reading does not fix this, and a better framework doesn't fix it. What closes an execution gap is structured practice with a mentor who can observe your actual behavior and give specific feedback on what you're doing and why. Go through the audit that we're about to do with an eye toward which type of gap applies in each area. Most people find that they have a mix: knowledge gaps in areas they've not yet explored, framework gaps in areas that they understand conceptually but can't yet execute systematically, and execution gaps in areas that they're already working in. The audit is most useful when you assess your current situation accurately rather than optimistically. Now, we're going to go through each engine with a set of specific questions. Think about your actual current situation as you hear each one. Not where you intend to be, but where you are right now. For each question, the goal is not to feel good or bad about the answer. It's simply to identify what's there and what's not. So let's look at the income engine. The first question is about framework. Can you describe your trading method in specific terms? Not just the instrument you plan to trade, but the specific conditions that tell you a trade is worth taking, and the specific conditions that tell you it's not. If you can write those criteria down clearly enough that someone else could follow them, well, you have a trading framework. If the best you can do is something like, I look for good setups, or I use a combination of signals, well, what you have then is just a general orientation, not a framework. And that is a framework gap. And it's one of the most important gaps to fill before you risk meaningful capital. The second question is about execution. Do you have a risk management rule that you apply consistently on every trade without exception? And not a principle that you believe in generally, but an actual hard limit that has governed every one of your last, say, 20 trades. If the answer is yes, well, you have at least that element of execution discipline in place. If you find yourself sizing up on positions that you feel confident about, or skipping a stop because the setup looks too strong to fail, that's an execution gap, specifically in the area of risk management, which is the most consequential execution gap in active trading. The third question is about process. When you look at your recent trading results, can you tell the difference between trades where you followed your process correctly and trades where you deviated? Can you identify which losses came from valid setups that didn't work and which came from setups that you shouldn't have taken? If you can, then you have the feedback loop that makes improvement possible. If your trade log does not contain enough information to make those distinctions, you have a framework gap, specifically in your review process. And without that loop, you will repeat the same mistakes without being able to see why. Two things are worth noting before we move on to the growth engine. First, if you've not yet started trading the income engine at all, most of your gaps will be knowledge and framework. Your execution gaps are probably there, they just haven't revealed themselves yet because execution gaps only become visible once you're operating in real conditions with real capital. And that's fine, that's expected. What the audit tells you in that situation is what you need to learn before you start, and what kind of mentor will get you to a functional starting point most efficiently. Second, of the three engines, the income engine tends to carry the most urgent execution gaps once trading begins. Unlike the growth engine or the accumulation engine, where you can often take a day or a week to think through a decision, the income engine makes demands in real time. The emotional pressure arrives faster and at higher intensity. If your income engine audit reveals an execution gap, it belongs at the top of your priority list. And not because knowledge and framework gaps are unimportant, but because execution gaps carry the highest financial risk while they remain open. Now let's look at the growth engine. The first question is about selection framework. Can you describe your stock or asset selection process in specific terms? Not just the general characteristics you look for, but the actual criteria you apply when deciding whether a given company or asset is appropriate for your growth engine approach. If you can walk through those criteria clearly and explain why each one matters, well, then you have a selection framework. If you rely on a general sense of quality without specific criteria, you have a framework gap. And it's the growth engine gap that tends to produce the most painful surprises because poor selection usually doesn't show up immediately. It shows up when the market corrects and the positions you hold don't recover the way quality assets do. The second question is about adverse move management. Do you have a specific plan for what happens when a position moves significantly against you? If you're running the wheel strategy and a stock falls 20% below your put strike, what exactly do you do next? A specific plan, not a vague intention to figure it out at the time, but a specific plan is what you need. If you've thought this through and have a clear response, well, then you have a framework for managing adverse conditions. If you've not worked through this scenario, well, that's a knowledge and framework gap worth addressing before it costs you. The third question is about real experience. Have you run your chosen growth engine approach on real money, even a small amount, for at least one complete cycle? For the wheel strategy, that means at least one full options expiry. For value investing approach, well, that would be at least one position from entry through to a meaningful review point. If you have, then you have some execution experience to draw on, however limited it might be. But if not, your knowledge of the framework has not yet been tested under real conditions, which means there are almost certainly execution gaps that have simply not yet revealed themselves. And that's entirely normal at this stage. Now let's talk about the accumulation engine. The first question is about thesis quality. Can you name at least one multi-year trend that you believe in enough to invest in right now? And can you articulate specifically why you believe in it? And I don't mean a general optimism about technology or energy or cryptocurrency, but a specific thesis. If these particular conditions develop over the next 3 to 5 years, this asset should be worth substantially more. That sort of thing. If you can do that, you have the beginning of a working thesis process. But if you can't articulate a thesis in those terms, the gap is in thesis construction, which is a knowledge and framework issue. The second question is about sizing discipline. Do you have a clear, consistent dollar amount per accumulation engine position that you would apply regardless of how excited you are about any individual opportunity? If you do, then you have a sizing framework. If you would naturally allocate more to the opportunities you feel strongest about, that's a framework gap. And it's the gap that most undermines the portfolio logic of the accumulation engine, because the whole model depends on consistent sizing rather than conviction-weighted allocation. The third question is about thesis management. Do you have a process for evaluating whether a thesis is still intact, as distinct from simply checking whether the price has gone up or down? That means reviewing the actual conditions the thesis depends on and asking whether they're developing as expected, or stalling, or moving in the wrong direction. If you do, then you have a review framework. If you would rely primarily on price movement to tell you whether a thesis is working, well, that's a framework gap in thesis management. And it tends to produce the two most common accumulation engine mistakes: exiting a good thesis too early during a drawdown, and holding a broken thesis too long because the price has not yet confirmed that it's broken. One specific note, by the way, about the accumulation engine audit. Many people find it the hardest engine to audit clearly because the gaps are the least visible of the three. With the income engine, gaps tend to show up quickly as real trading losses. With the growth engine, a poor selection process eventually reveals itself in underperforming positions. But with the accumulation engine, gaps in thesis construction and management can stay invisible for a long time because the positions are long horizon and the feedback cycle is slow. And that's why doing this part of the audit carefully now, when the financial stakes in the accumulation engine are still relatively low, is much easier than trying to do it objectively later, once you have significant capital in positions and a natural interest in believing your process is sound. You should now have a clearer picture of where your gaps are across all three engines and what type each one is. The next step is prioritizing, because you cannot close every gap simultaneously, and spreading your attention evenly across all of them is one of the most reliable ways to make slow progress on all of them. The prioritization rule is quite straightforward. Fill income engine gaps first. The income engine is the foundation of the system. It generates the cash flow that feeds the growth engine, and it does so on a monthly basis. If the income engine is not working well, whether that's due to a knowledge gap or a framework gap or an execution gap, the whole system is underpowered. The growth engine and accumulation engine can absorb a period of slower development because their time horizons are longer. The income engine can't. Getting it right as quickly as possible is the most time-sensitive priority in the virtual investing organization build. Within the income engine, execution gaps are the highest priority of the three. A knowledge gap can be addressed relatively quickly through structured learning. A framework gap can be closed in a matter of weeks once you find a mentor with the right method. But an execution gap takes longer to close. It requires active feedback on real trading behavior, and it carries the highest financial risk while it remains open, because execution gaps manifest as real losses before they're corrected. If your income engine audit surfaced an execution gap, that goes to the top of the list. After the income engine, address growth engine gaps. The most impactful growth engine gaps to close are typically framework gaps in selection and adverse move management. Unclear selection tends to produce positions that underperform during market corrections, and inadequate adverse move management tends to produce larger losses than the approach should generate when conditions turn difficult. Both are fixable with the right mentor, but they need to be on your radar before real capital is at stake. Accumulation engine gaps are lower urgency in the early phase of the system, and for a practical reason. The accumulation engine receives very little capital in its first year. The 10% transfer from the growth engine is small when the growth engine base is small, and direct contributions only start from month 7. So you have time to develop your thesis process before significant capital is deployed, but use that time productively. The research and framework work that you do in the early months determines how well positioned you're going to be when the accumulation engine starts to receive meaningful amounts. Now build the gap map. Use 3 columns: engine, gap type, and priority. Aim for 1 or 2 rows per engine, the most important gap in each one. Keep it focused. The purpose of the map is not to document every single area of uncertainty, but to direct your attention toward the specific gaps that will make the biggest practical difference if you address them. Once the map is built, it becomes your hiring brief for the virtual investing organization. When you go looking for a mentor, you're looking for someone who specifically addresses the gap type that you have identified in the engine where you need the most help. A knowledge gap calls for a clear, structured educator. A framework gap calls for a mentor with a tested, specific, repeatable process. An execution gap calls for a mentor who provides active feedback on real trading or investing behavior, not just someone who produces useful content about markets in general. The more specific your gap map, the more targeted and effective your mentor search will be. And it's a good idea to revisit the gap map every few months. As you work with mentors and develop skill, gaps close, but new ones sometimes emerge. A framework gap that you successfully filled might reveal an execution gap that you couldn't see before. Or a knowledge gap in one area might close while revealing a related gap in an adjacent area. The map is a living document, not just a one-time exercise. And keeping it current keeps your virtual investing organization development pointed at what actually matters at each stage. Now, to recap what we covered today, there are three types of expertise gaps: knowledge, framework, and execution. And each type requires a different solution. Knowing which type you have prevents you from applying the wrong fix and wondering why you're not getting any better. The engine by engine audit gives you a structured way to identify your gaps specifically, not as a vague sense of what you don't know, but as a concrete gap in a concrete engine with a concrete type. That specificity is what makes the gap map useful, and the gap map is what makes the mentor search productive. Prioritize the income engine first, with execution gaps taking the highest priority within it. Fill framework gaps next, then knowledge gaps. Apply the same sequence to the growth engine and treat accumulation engine gaps as a slightly longer-term priority that you're actively working on in the background, rather than ignoring it entirely. If you've not yet done the audit, please stop here and do it. Work through the questions for each engine. Fill in the gap map, and bring it with you into the next episode. The more specific your gap map is, the more useful the material will be in the next episode, because we'll be looking at how to evaluate and find mentors who close specific types of gaps, and a precise brief produces a much better result than a vague one. Now, the next episode is about finding and evaluating mentors, the specific process for identifying who is genuinely skilled, whose method is right for you, and how to trial someone before committing real time and attention to their approach. That's where the virtual investing organization starts to get built in earnest. Going in with a clear gap map makes that process significantly more focused and effective than going in with a general sense that you need to learn more about investing. So subscribe so that you don't miss it, and we'll see you there.